Hi, I'm Pattu from freefincal. The government has just released the schedule for the release of sovereign gold bonds for the financial year 2020-2021. I have talked about sovereign gold bonds and purchasing gold and investing in gold and so on in several other videos. Let me quickly talk about when to use sovereign gold bonds and when not to use sovereign gold bonds for people who are new to the channel or people who are new to freefincal per se. So before we go ahead, a couple of announcements. So the I have announced a lockdown offer of rupees 1000 off on my goal-based portfolio management lecture series. These are a series of videos on how to reduce risk and achieve your target corpus no matter what the market condition is, and these videos are hosted in a private Facebook group. I'm happy to announce that that group is almost 1500 members strong as of today. Almost, just a couple of people short. I think hopefully by today or tomorrow they will join. I also would like to extend this lockdown offer, since the lockdown itself is extended until the 3rd of May. Hopefully that will be the end of the lockdown. And if you are interested, you can access the this link in the description or on the first comment. The first comment which is pinned. The first lecture is free. You can see the first lecture and decide for yourself what is in the course and whether it will be useful or not. Many members in the group have devised their own strategy based on this and how to handle asset allocation before retirement, after retirement, or for any other kind of goal. So that's what we'll get in this course. Please look at the first lecture and you should be able to decide. I'm just going to keep this discount on until the lockdown, because more people can come and hopefully benefit, and also this would be the time they can get to see the lectures in some peace. Hopefully they may have some time. People who have, I've been talking to a couple of people and they told me that working from home does not seem as nice as it is, and they don't they find it a little more strenuous, but I hope that's not the case for everybody. Anyway, that's that. The second announcement is the April 2020 Equity Mutual Fund Performance Screener is now available. The screener is now priced at as you know at rupees 111 for this month's screener. By the way, this course is now priced at 1570. The full price, this lecture series is 2570 is the full price. This is a one-time fee. Since 1000 rupees is off, it's now 1570. That's a 39% discount. And this mutual fund screener is rupees 111. And you can check for how consistently your mutual funds are performed. All equity mutual funds and aggressive hybrid funds are available for screening. And from this month onwards, I have included CRISIL 65-35, that is 65% of BSE 200, 35% of bonds hybrid index as a reference benchmark for aggressive hybrid funds, and that will also be part of the screener when you buy. You will have two files in the screener. One is an ordinary data file which you can use in any spreadsheet software, LibreOffice, OpenOffice, Google Sheets, whatever. And the other is a Excel sheet which which has got macros in it, so you can choose whatever you want, the way you want. You can screen it and play around with the numbers and get an idea of the best performing mutual funds. You do not get this kind of screening anywhere else, and that much I'm fairly confident about. All right, getting back to sovereign gold bonds, I'm not going to keep talking about what are the features of the bonds, blah, 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 this and that. There are plenty of videos for that. You can go have a look at that. This is the tranche schedule. You can see that there'll be one every month: April, May, June, July, August, and then August there are two. Just until the start of September, there are something like 6 tranches, 6 batches of bonds. And when should you not use these bonds? Now, well, very quickly, for the sake of the argument, for the sake of the discussion, excuse me, 8 years, these sovereign gold bonds have a tenure of 8 years. If you hold them until maturity, it is tax-free. The gains, if you get gains, are tax-free. You get a 2.5% interest, just like an SB account. That interest is taxable. You can buy them on the secondary market via a demat account. They are usually on offer on a discount because desperate people, they want to sell because they want cash. That's why they are willing to sell at a loss. Somebody's loss is your gain, and that's why they are available on a discount. If you buy it mid-term via the discount and hold it until maturity, still it is still then it is even then it is tax free. All the rules are applicable. When not to use sovereign gold bonds? If you are interested in getting some returns from equity, if you want to tactically enter and exit and book some profit, do not use these bonds, because if you want to buy, if you can buy them at a discount, but if you sell them, then you will know you have to sell at a loss in the middle. Your loss will be somebody else's discount. So if you want to get some returns without any particular aim, or if you want it for in your portfolio for diversification, if you want to manage risk by rebalancing systematically and so on, then also don't buy. If you rebalance, you will lose money, because again the liquidity is so low that you have to sell at a loss. So don't do it. If these are your goals, use gold ETFs which are nicely traded, where the price to NAV difference is low, or use gold funds. And please remember, don't expect returns. These are the 8-year rolling returns as of March 2020 from January 1979. You can see that they just keep going. Anything is possible. Don't buy gold expecting returns, because the volatility of gold is extremely high. You don't know how, you just don't know what return you can expect. Just like equity, it's pretty risky. You use sovereign gold bonds only if your aim is to accumulate gold for a marriage. Whether it is, if it is more than 8 years, you can buy when the government issues, that is in the primary market via banks and so on, or you buy using demat account in the midterm in the secondary market in between and hold them until maturity. This is a risk-free, tax-free way, because it is risk-free, because your ultimate aim is going to be purchasing gold jewelry, which is 22 carat. This is 24 carat price tracking. Whatever the price finally, high or low, it doesn't matter. You're going to use it to buy jewelry, so there's no loss or gain. It's completely risk-free. You're just going to use that money and buy some jewelry. For that and that alone, use sovereign gold bonds. Do not use for anything else. Don't buy and get caught into all this, and don't buy for returns. You will be disappointed because it's just too volatile. You don't know what's going to happen. So that's what I wanted to say. Explore the contents of the course, explore the mutual fund schemer. I'll catch you later. Bye bye.